Good morning, everyone, and welcome to this series of Charlie Mike. I'm happy to introduce today's presenter, Brad Reaves from the Reaves GovCon Group. And Brad, what are you going to be talking to us about today?
Thank you so much, Maria. I really appreciate having the opportunity to talk today about the Corporate Transparency Act, the CTA. So it's a big topic. It's timely, just in effect January 1st, 2024. So we've got a lot of good stuff to talk about.
Awesome. So I'm thrilled. I'm going to turn this over to you to talk about this very, very important subject that is very relevant, especially in today's marketplace. So with that, I'm going to kind of tune out here, and I'm going to go off camera.
No problem. Thanks, Maria. I appreciate it. All right, let's jump right into this. Let me start by saying this to everybody who's watching on YouTube later in time. I'm putting my email address up on the screen right there, brad.reaves@reavesgovcon.com, brad.reaves, R-E-A-V-E-S, at reavesgovcon.com. You can email me at any time while you're watching this, and I will send you the slides from this presentation. And the reason why that might be particularly helpful for you is because we have a number of not just citations, but links to the actual government pages that you're going to have to go to and navigate through in order to file these compliance reports that we're going to talk about today. So we really did want to tell you what every small business, every veteran-owned, every service-disabled veteran-owned small business in the country needs to know about these mandatory reporting requirements. So let me give you sort of a forecast of where we're going to go today, a little bit of an overview. We're going to start out by talking about the Corporate Transparency Act, what it is, how it developed, why it's here, what the requirements are. We're then going to talk about the deadlines. The deadlines, you know, as a government contracts attorney, I deal with bid protests and all sorts of other filing deadlines. The deadlines are always the first and most important thing I want to talk about because they're exactly that. If you don't meet the deadlines, there are consequences. We'll talk about that. Some significant consequences for not following the Corporate Transparency Act reporting requirements. So we'll talk about determining, this is, you know, just as important as the deadlines, is determining, is your company required to file? And that's a little bit more complicated of a question than you might think. And I will tell you, just in a big sense, normally, you know, after having done this for almost 20 years, I can tell you, usually you have exclusions for small businesses. A lot of the major reporting requirements or compliance requirements, they will exclude small businesses. The Corporate Transparency Act is just the opposite of that. They are trying to capture all the small businesses. And in fact, the larger you are, the more likely it is that it doesn't apply to you, which is a little counterintuitive, but we'll explain that. Then we'll talk about sort of some of the details about what you actually do have to report about your company. And then the real crux of the reporting is this BOI, or beneficial ownership information that you have to report. So we'll talk about what that is. Who do you have to report about, and what do you have to report about them? Then we'll talk about FinCEN. You know, we've got a sea of new acronyms that you'll have to learn. FinCEN stands for the Financial Crime Enforcement Network at the Department of Treasury. So we'll talk about getting a FinCEN ID, and just some lessons learned from doing these reportings. I can tell you, I have done these reportings for my own businesses, and then at my law firm, we have done these for our clients. We're based in Virginia. We're registered agent for about 350 businesses, you know, where we handle all their annual filings with the State Corporation Commission. So starting with that group, we've been doing a ton of these filings, helping people do these. But what I want to do is give you the ability to do these yourself, or the know-how and the knowledge to do them yourself. You might still want some professional help doing that. I can tell you that from what I've heard from all of the different accounting firms, you might think, oh, okay, this is a filing with the Department of Treasury. My accountant can just just handle it. For whatever reason, the underwriters for professional liability for CPAs, they are not allowing accountants to do this. They're not allowing them to give advice about beneficial ownership or compliance, and they're not allowing them to file these. And I know that just because a bunch of accountants have been sending these to us, all the questions to us and asking us to help file with these. So what we'll do is we'll talk about, the how-tos. I've got a number of screenshots to walk you through that process. And then importantly, we'll talk about how to maintain ongoing compliance with it, how to track it. This is thankfully not something you have to do year after year after year. You will have to do it this year if you fall under the category of those who have to report. But you do have to update with changes. And so we'll talk about those very important changes so you'll know what going forward would require you to have to file again. All right. I'm a lawyer. I apologize. I have to start with the disclaimer. The disclaimer is just that this is for educational purposes. This is very up-to-date information right here in 2024. But if you need legal advice on specific situations, you need to contact an attorney that's familiar with the Corporate Transparency Act. With these regulations and requirements, you can contact us, but contact somebody that knows what they're talking about. There's a number of law firms out here that could help you with this. Also, I would ask that you please don't reproduce or distribute this. You all are, if you could just keep it for your own use, I'd appreciate that if you reach out and ask for a copy. All right, now let's get into the overview. So here is sort of the big takeaway. We'll talk about an overview, and then we'll kind of start getting down into the details. The overview is that starting January 1st, many or even most, depending on how you look at size, small businesses in the United States, which includes, by the way, not just government contractors, these are commercial businesses as well. So if your partner owns a bakery or a yoga studio, they're going to have to deal with this too. It's not just government contractors, but it certainly captures all government contractors, and there's no exclusion generally for government contractors. So the estimates are that this means that more than 32 million companies will be impacted. All right, so that's like about a company for every 10 people in the country are going to have to do this filing. And these filing requirements have never existed before. I'll just mention that I was talking to a banker a week or two ago about these requirements, and the banker's like, oh yeah, we're already doing all that. We've had these requirements for a long time. Well, the banks have had some reporting requirements like this, but these requirements have never existed, and these requirements have never existed on the companies, on the backs of the companies. So this is where you are required to file, or you are required to, hire a professional or somebody to help you file. So as of 2024, both legacy companies, in other words, companies that existed prior to 2024, to January 1, 2024, will have to file, but also new companies that are created as of January 1, 2024, will have to file, or they'll face substantial civil and even criminal penalties. I know that sounds intense, but it's real. And you're also going to have to provide information. This goes back to that BOI, beneficial ownership information I mentioned, about individuals who either own 25% or more of the stock or membership ownership interest in the company. Those people. Also, you'll have to report about people who have substantial control or who exercise substantial control over the company. We'll talk about that in more detail, but it's not just people who own 25% or more. It's also these people who have control over the company. All right, let's talk just a little bit more about why we're doing this, because you're probably just thinking, Brad, this is just one more thing. How could they come up with just one more thing? Well, here's kind of where it came from. And it came actually back, it came so far back that, not to be political, but it was back when Barack Obama was a senator, was when the first iteration of this was proposed. Okay, that's how many years it has taken to move forward. This was bipartisan legislation. You might think, okay, well, why would both sides want this? And one of the reasons why is because there is a significant sort of, almost think of it as conservative, very crime, more pro law enforcement bent to this, reasoning behind this. So for decades, Congress has been concerned about shell companies being created and that those shell companies could facilitate criminal activity. And I've got a list of some of the things, probably chief among them, tax evasion, but there could be other things too. But what the government is concerned about is that you create these entities and there's not maybe any public record of who owns these entities. Now, you probably know that when you go to a bank to open a bank account, the bank is usually supposed to ask for documentation that would show who the owners are, but there's no public facing information for an LLC, for instance, when you create that necessarily, if you go and have an attorney create it for you, that's going to show who the owners of the company are. And so this is something that law enforcement has been asking for a long time. So the Corporate Transparency Act basically tasked FinCEN, which is the Financial Criminal Enforcement Network at Department of Treasury, to create a process for the reporting of the information so they can get behind these shell companies. Or I say shell companies, it's not just shell companies, it's small businesses, small entities. And have them report this information about owners and beneficial owners to the Treasury so they could have that information for their investigative purposes. Now, I will say this, that information does not become public because you file it. I know there's probably a lot of concerns about that, but when you file it with the Department of Treasury, we'll go through the process of how to do that. They have access to it, and quite frankly, they've said that they will even share that, perhaps with foreign governments, with partners for criminal investigation. But for instance, there should not be the ability of a competitor to file a FOIA request with the Department of Treasury, FinCEN, to find out who the owners are of your company. It should not be, it's not going to be publicly reported, and it's not going to be publicly accessible through the FOIA process. So, Congress, like I said, this is a little bit different than other compliance programs where sometimes they give the small businesses a break. Not in this case. In this case, it's the small businesses they're really focused on, and we'll explain more about that. So there are some exemptions, but I will tell you right now, and as somebody, I can tell you this, as a small business owner myself of a couple of different small businesses, if you read the 23 categories of exemptions, it'll probably just make you mad because it'll just tell you that whatever that your industry, you know, me, I'm in a law firm that helps government contractors, or you all are government contractors, you'll just see that you apparently don't have very powerful lobbyists in your corner because all the different weird sort of cottage industries that got excluded from this, I got to tell you, none of my hundreds of clients fall into those categories. So unfortunately for small government contractors, SDVOSBs, VOSBs, you're not going to fall into these 23 exempt categories. The only one that you might fall into is, as I was mentioning before, is the large operating company exemption. Okay, and we're going to talk a lot more about that, but the quick and dirty is that if the company has over $5 million in average annual revenue, and actually what they're looking at is they're looking at the most recent year's tax filing. So right now we'd be looking at the tax filing for 2022, which you did in 2023, but you'd also need to be conscious right now since we're coming up on March 15th. And depending on when you're watching this, you might be watching it after March 15th, where you filed your 2023 taxes in 2024. That's what you'd be looking at. So you'd have to have more than $5 million in revenue, but you also have to have more than 20 full-time employees in the United States. Okay. So, and then I will say this too. So even if you happen to have more than 5 million in revenue and you have more than 20 employees, if that entity itself, while that entity may be exempt from reporting, if you have any other business entities, if you created an LLC to buy the building that you now lease back or rent back to your company, and that entity obviously has no employees, or if you have any other entities, and this is a big one. The training I did for Charlie Mike last January was on joint ventures. If you have a joint venture, which is a separate entity and by SBA rule is an unpopulated entity, in other words, it has no employees, right? So it doesn't matter if it has 100 million in revenue, it has no employees. Those entities will have to report. So that's an important piece here, is that you have to have both. You have to be both over 5 million and over 20 employees. So if you could be again at 100 million, but if you only have 10 employees or if you have 0 employees, you're going to have to report. All right, here is the impact of like, okay, well, here are the deadlines. Like I said, let's start with the deadlines. That was, again, mostly an overview. We're going to dig into the details on each one of these, but let's get into the deadlines. So for companies that existed before January 1, 2024, you have the rest of this calendar year to comply. So I'm recording this at the beginning of February 2024. So right now there's T-minus 11 months left to comply. Again, if your company existed before January 1st, you've got the rest of the year. I would not wait. I would go ahead and do it. Like I said, I've already done it for my companies. We're going through our clients right now and helping them and people who are reaching out to us. Now, what about a new company? All right. So if the company was created after January 1st, so if you got a new joint venture, I think we've already created probably 4 or 5 joint ventures this year for clients. And the very first thing, we help them get their EIN, we help them register, we're working on the operating agreement, joint venture agreement, and so forth. But one of the new things we have to say is we say, look, you have 90 days to file this beneficial ownership information with Department of Treasury. And then we usually help them and coordinate with them to do that. But that's just a new part of our process, is that if we're creating a new entity, like I said, I mentioned joint ventures, but it could be another entity too. We've created other entities for folks starting in January 1st and this year. And once we did, it's like, okay, we've only got 90 days. So understand the distinction there. If your company already existed as of January 1st, 2024, you can wait. You have some time to do that for the rest of this year. But if your company was created January 1st or later, then you're going to need to file within that 3-month period, within 90 days. Now, if you're anticipating creating a new company next year, January 1, 2025 or later, then you only have 30 days. So initially they wanted to make it 30 days for this year as well. But they did ultimately relent on that. And they said, okay, well, this is a transitional year. Let's give people 90 days. But this is going to be in 30 days. I'm sure 30 days comes pretty quickly. So that's something we're going to be beating home, with our clients and in training and education, as we get to the end of the year is, hey, if we create a new joint venture, if you create a new business entity, if it's a new real estate holding company, whatever it is, we've got to do that filing within 30 days. All right. Like I said, thankfully, you don't have to file this every single year, but there is a continuing compliance portion, and that is you're supposed to file an update if there are any changes within 30 days from when the date occurs. So that could be a change in beneficial owners. So if you have a change in ownership, if you have a sale of the business, sale, merger, acquisition, or talking about joint ventures, mentor protege. If you have a mentor buy in and maybe buy 20%, 30%, 40% of the company, so the BOI changes, the beneficial ownership information changes, you've got to file those updates within 30 days. And also within 30 days of learning, let's say you were over 5 million and you were over 20 employees, last year, but then once you get to tax return this year, you're at 4.5 million and you're at 30 employees. Well, employees don't matter. If you're only at 4.5 million, that means you have to report. So within 30 days of the change occurring, you then have to file. If you become aware of an error, you've got 30 calendar days, not business days, 30 calendar days to file an update. So here's my tip. This is the last bullet here. The compliance tip here is that each company should appoint a compliance officer that is in charge of tracking reportable information. There's got to be a person, right? There needs to be a person. And I will say this, the dozens of companies that we've helped do this already, we'll end up helping hundreds. We're talking to a lot right now. Even in that situation where you're going to use, maybe your attorney to do this for you because they're already tracking your ownership. They can look at your corporate documents. They know they can give you advice on what to report, who to report. in terms of BOI information. Even if you're doing that, you need to have a lead person at the company. There needs to be somebody who's going to ride herd over the information exchange with counsel to file this stuff. Or if, again, I want to give you the tools to be able to file these on your own. If you're going to do that, then there needs to be one person that's the repository of that information. Because as we'll talk about, there's very specific information that they're going to need to gather, and they're going to need to track. They're going to need to track, when things expire, when they're going to have to update. They're going to need to track when people are moving, changing their home addresses, when the company changes their address, when the company changes its name. Like I said, if there's change in ownership. So change. That's important because it starts that 30-day time clock ticking. So again, we're going to get more into the details about what has to be reported, but I would say identifying a point person. And I realize some of the companies are so small. I mean, when I started my business after leaving a large law firm 12 years ago, it was just 2 attorneys in the beginning before we started growing and growing and growing, right? And so I know what it's like to, when the buck stops with you, it might just be you, right? If you're the president, the secretary, and the treasurer all kind of rolled into one, that's fine. It can be you, but there needs to be somebody. There needs to be somebody on this, because as we'll get into when we talk about the fines, it's really no joke. And here it is. The potential liability for noncompliance. Get this, okay? The Corporate Transparency Act imposes civil penalties of $500 per day for the violation continuing. And then also if they determine that you're doing this willingly, that's for just not complying. But if they find out that, if they think that you're hiding this information or you're providing false information or something along those lines, there can be criminal penalties that are $10,000 fines and up to 2 years in prison. Okay. But $500 a day, my quick math is that's $15,000 a month. That's for failing to do the filing that we're talking about today. So this is real. They are putting teeth on here. And quite frankly, I don't know that I've seen any requirement. And again, I'm a small business attorney. I specialize in helping, service disabled, veteran owned, 8A, Hub Zone, women owned, all these SBA programs. This is what I've been doing for a couple of decades. I have never seen a compliance requirement that had this significant of a stick with it, teeth, stick, use whatever metaphor you want to. $500 per day fine for failing to file for every day that you haven't filed, after that 30 days or after that 90-day period, or for companies that were in existence before January 1st. If you wait until the end of the year and you haven't filed yet, and it's January 1, 2025, it's a $500 per day fine. So remember that the penalties, it may not just be a company penalty. That could be a penalty to a senior officer, board member. So you just can't ignore this requirement. This is not one that you can ignore. You can hate it. You can curse about it. You can get mad at me about it. You can do whatever, but just comply. You have to comply with this one. And again, whether it's a good idea or a bad idea, this did pass over a presidential veto. So it was bipartisan enough that there was enough folks to vote on it that it passed. I will, when I've done some training on this and I got some live questions, a question somebody asked, which I thought was a very good question because it did pass, like I said, over Trump's veto. They said, well, wait a second, we're in one administration. What if we change administrations? Are we going to spool up and do all this and then the election's going to happen and there's going to be a change in the outcome? Well, here's my answer to that. This was not done by an executive order. So a lot of the different things that you see where on day one, the president is, overruling every executive order of the prior president and changing all kinds of stuff. Because the Corporate Transparency Act was passed by Congress, I believe that you would have to have Congress have to come in and amend this thing. So it's been implemented by the Department of Treasury. But again, there is some desire. Well, there's great desire. I've heard the head of FinCEN, the head attorney at FinCEN talk about this. There is a great desire to have this information for law enforcement purposes. So I do think not just for now, but I think this is here for a while. And likely forever. I'm not going to predict that anything's going to be here forever, but it doesn't look like it's going to go away. That's the takeaway. It doesn't look like it's going to go away if we just have a change in administration. All right, let's talk about reporting companies' definition. We talked a little bit about this, kind of the big picture, the 5 million and the 20 employees, but let me give you just a little bit more detail on that. So first of all, what entities need to file? And that's kind of a simple answer, which is if when you created your company, you had to file something with the state. So in Virginia, like I mentioned, that would be the State Corporation Commission, the SEC. In many states, it's the Secretary of the Commonwealth or the Secretary of State or some similar office. If you had to file something, then you are at least potentially a reporting entity. If you did not have to file something, so that could be a sole proprietorship or in some states, a partnership, then you potentially do not have to file. I'd be careful there, but sole proprietorship, so if you're just doing business as, Bob's whatever, Bob's machine shop, and I don't know, I've had a couple of clients that have gotten government contracts as sole proprietorships. Not many, I can count them on one hand. But if you are sole proprietorship, you don't necessarily have to file. But anybody else, anybody who's a corporation, an LLC, any business entity that's been created by filing with a state, that qualifies you to potentially file. Now, do you qualify for an exemption? As I mentioned, there's 23 exemptions, but the main one is this large operating company that you got to have more than 20 full-time employees. You got to have a physical office in the United States, and then you have to have more than 5 million in gross revenue, including sales to subsidiaries and affiliates per IRS filings in the previous year. All right, and it has to be both of those. So here's the information that you have to file. You have to file and again, let's first start with companies that existed before January 1st, 2024. You have to file information about your beneficial owners. We'll get into exactly what that is, but that's the whole 25% ownership or substantial control, okay? Before January 1, 2024. Now, listen to this. I haven't mentioned this yet, but this is another little twist here and an additional piece of information. If you create the company this year, 2024, January 1, 2024, or after for eternity, all right, you have to file the information about your beneficial owners, so the 25% or more substantial control people, and you also have to file information about what's called the company applicants. And the company applicants are the people who created the company for you. So quite frankly, if LegalZoom created your company, I don't know how this works. Maybe you report about LegalZoom. But let's say if you do this in-house, so if you do all of the filings yourself, you don't use an attorney, you don't use an accountant, just in-house, you go to the website, you submit the documents, you pay the fee, you file the articles of incorporation or the articles of organization for an LLC. If you do all that, whoever is doing that will have to report the information, their full legal name, their address, all of that information, okay? If whoever's doing that. Now, if it's a law firm, like I said, we create tons of business entities. If we do that, we have to report our information. We have to coordinate with you and report our information. So we are the ones that are reporting about ourselves. So my, firm is called Reaves GovCon Group. And so we'd have to report that. And here's the interesting thing too. Not only do I have to kind of report on myself that I was the one who helped you form the company, but my corporate paralegal who, in order to keep costs down, we have paralegals do some tasks, especially, corporate formation. We have to report about them too, their names as well. So they want this information, and you might say, why in the world would they want that information? Well, I guess at least one reason is that if they start doing an investigation and they find out that all these shell companies have been created and they're laundering money, they're not paying taxes, et cetera, then maybe they want to see who created them. And so maybe they come knocking on my door and they're like, all right, Mr. Reaves, you created all of these shell entities and they marched me away in handcuffs. I don't know. I think it's something like that. They just want to see who is creating these companies. But again, this is important. You don't have to do that if your company was created before January 1, 2024. But if it's created January 1, 2024 or after, that information will be needed in addition. Okay, let's drill down on these beneficial ownership requirements. As I mentioned, you have to, this is bright line, black and white. If somebody owns 25% or more of the ownership interest, you must report them, right? But then the other category is somebody who exercises substantial control. We'll get into that, what that means, but here is what you have to report related to that person. Their full legal name, date of birth, their complete current residential street address, not the company address, but their home address. And notice that this becomes important because every time one of your owners moves, you're supposed to update this information within 30 days or there's the fines. I know it's ridiculous and it's nitpicky, but this is what they're asking for. You also have to provide the unique identifying number and the jurisdiction that issued either a passport, a driver's license, a state or local ID document. They want you to scan this information and to submit that information. And it has to be, like I said, unexpired. They want the number put in and they want the image and they want it to be unexpired. So that's for all of the beneficial owners. So like I said, the 25% is pretty black and white, but here's something that's where it can get a little bit tricky. If you have an agreement in your company whereby maybe somebody is not an owner in the sense that they don't have a stock certificate, they're not a member of an LLC, but if they have a right to receive at least 25% of the profits. So sometimes us lawyers call that phantom equity or synthetic equity. If you have some kind of a contractual agreement with somebody where you got to pay them part of the profits of your company, and it's 25% or more, you're going to have to report that person, right? You're going to have to report that person, even though they're not actually an owner, because that's why they call it beneficial ownership information. Now, the other piece here is that even if somebody owns less than 25%, let's say you have 5 owners that own 20%. Does that mean you can report nobody? No, because you also have to report anybody who has substantial control over the company. So I got to tell you, me personally, especially if you rub this up against the SBA affiliation regulations, I will tell you that the SBA affiliation regulations say if everybody owns an equal amount, if it's 20%, everybody controls. So what I would do as a default in that situation is I would advise my client to report all 5 owners of 20%, because I would say arguably, at least under the way the SBA looks at control regulations, that they control the company, even though they only have 20%. So, let's go back and forget about ownership here. Let's just talk about substantial control more generally. How do you know if somebody exercises substantial control? Well, here's what the Treasury Department in their guidance and FinCEN has put out. This is, again, black and white. If they are a senior officer of the company, and the ones they list are CEO, COO, CFO, and general counsel, or the lead attorney, in-house attorney for the company, CEO, COO, CFO, general counsel, so C-suite, you need to report that person. All right. Even if they have 0 ownership, you need to report that person. Also, if somebody has authority over the appointment or removal of senior officers, or or a majority of the board of directors or similar body. So here, let me sort of demystify this. One question that is a good question is, okay, you got to report these senior officers, the C-suite people. What about directors? If it's a corporation, what about directors? Or in an LLC, what about managers or managing members? I can tell you that my default advice here is going to be to report, because I think you could, number one, you don't want to risk not reporting. And number two, unless you've got a board that's got like 10 or 15 people and it's very clear that the individual board members really don't have control. They don't have the 25% ownership. If we're talking about a closely held company, which, quite frankly, most of the company, even the large businesses that I represent that are doing, 50 to 100 million a year or more, typically the boards are not that large. So I would say, to be safe, even if hyper technically you might not absolutely have to, I would report the board members as well. Because you can notice they say anybody who directs, determines, or has substantial influence over important decisions made by the company. I mean, again, we're getting into an area of gray. Like I said, there's black and white, 25% black and white. There's CEO, COO, CFO, general counsel. Those are black and white. Now we get into the gray of like, okay, are they a director? Are they a manager? Do they direct, determine, or have substantial influence over important decisions? I mean, this could even be key employees, division managers, those people. And again, these are some of the areas where, if you're a one-person company, you're going to have to report yourself, right? And so you're certainly not going to have to call me to get a legal opinion as to whether you need to report yourself. You will have to. But in some of these situations, that's where you might want to get some advice about what to do and what to report. But I would say, to be safe, when in doubt, report. Let's put it this way. There's no penalty for over-reporting people, who have substantial control over the company. All right, company applicant requirements. I'm going to go through this quickly because I already mentioned it. This is just kind of the more detailed slides. And like I said, I gave my email address at the beginning. I'll give it again at the end of the presentation. If you email me, I'll send you this and you can kind of go through and read some of this stuff in a little bit more detail. But this is what I was saying about, like, if you hired me to create a company for you, then I'm going to have to actually report about myself. But that's your company requirement. But, whether we're helping you or whether we're giving you the information to file, if the company was created after January 1, 2024, that means that you have to report about who created the company. And like I said, even in the line of command, the chain of command, I tasked the paralegal with filing with the State Corporation Commission. They did that. And so we have to report all of our information. All right, let's go through the actual reporting procedures. And this is, like I said, I wanted to give you some screenshots from the actual filings that we have performed. And these are actually the filings that I did, like I said, for my own businesses. This all came live January 1, 2024. Like I said, Financial Crimes Enforcement Network. This is part of the Department of the Treasury. This is the procedure for reporting. And this is the website right here. It's www.fincen.gov/BOI. So this system is up and running, and they actually have some good information on that too. It's funny. Some government website, you've got SAM.gov, which is so clunky. The SBA's DSBS, Dynamic Small Business Search Engine. I mean, some programs are just so clunky. This one, because it's newer, it's a bit better. And not just that, it's got some pretty good instructions. But there's a lot. I'll just tell you, when these requirements, we knew these requirements were coming, we spent the last couple of months of 2023 ramping up to be able to not only put presentations like this together, but to be able to help our clients immediately on January 1st. So there's a lot that we've sort of synthesized. And so what I'm trying to do today in this relatively short presentation is to give you kind of all those details. And so that when you go to the website, I think after watching this, I don't think you'll be overwhelmed. I hope you won't, because we've talked about the main points. But they do have some helpful information on this website. Even guidance on filing. So each person who does file through that website, they've got to certify. And those of you who are government contractors, every time you hear the word certify, your ears should be like, boop, they should just pop up a little bit, because any certification could be a false certification. So you want to make sure. That's why, like I said, it's important, especially if you're filing these in-house, to designate a compliance officer, because that person's rear end is going to be on the line for doing that, and then potentially the company as well, that those certifications have to be correct. So again, even if somebody's doing it on your behalf, you want to pick somebody who's trustworthy. All right. So then we have, within this process, there is a FinCEN ID. Now, a FinCEN ID, what it is it's something, it gives you a login and it makes it just a bit easier if you, particularly if the owner of multiple companies, but you might even just want to get one. I got one. I got a FinCEN ID because I'm the owner of multiple companies. Because every time you're identifying yourself, all you have to do is input your FinCEN ID. And I know it's just one more login, one more password, one more ID to keep track of. But I can tell you, I have a client that has over 20 entities. Okay. And of many of those entities, because they're different kind of real estate holding entities and investment entities, this client is the 100% owner. Now, absolutely 1000%, this client has to create a FinCEN ID. We're creating a FinCEN ID for this client so that every time we don't have to put, this is where they live, this is their home address, this is their date of birth, this is their scan, everything. You do that once, and then you use that ID going forward. And if you need to make changes, you just go into your FinCEN ID and you make those changes. Does that make sense? I hope everybody understands that. So particularly if you're an owner and you're an owner in multiple entities, you're probably going to want to get one of these. But again, if you're going to do this, if you got a compliance person who's doing it, they're going to need to track all this stuff. Somebody's going to have to track the login. Somebody's going to have to track the password. Somebody's going to have to track all this. So, that's one of the things that we're trying to help people out with, people who want to sort of outsource this, or again, have the same law firm that's created their company and that's managing their ownership and changes and things like that to do this. We're tracking all this. If you do it in-house, that's fine, but have somebody who tracks all of this once they create these accounts. So this is what it looks like, to get your FinCEN ID. So they have you fill out all these different fields, name. This part of the presentation can go a little bit quicker because I'm just going to kind of buzz through some of these screens so you'll be familiar with them when you go in to do the filings. But name, residential address, business address, and then you identify, okay, well, what's the identification that we're using? And you can see here, man, this is giving all my information. Oh, I'm glad it X'd out my date of birth. I don't want anybody guessing my date of birth, but there's my FinCEN ID right there, right? That's the number that that they gave me for identifying my FinCEN ID. It's got my full name, date of birth, business address, all that information, and you'll save all that. You'll want to document those. You want to save those, download those. Now, once you do that, like I said, it makes sense to get that FinCEN ID, especially if you have to report on multiple entities. But this is the actual BOI filing, the beneficial ownership information filing. So if we go through all the stuff we talked about, you determine that your company needs to file, or maybe you determine that your primary company doesn't need to file, but you have a JV or you have other dormant entities that are just sitting there, shelf entities, or other entities that don't have 20 employees, and you need to file, you go to this system right here, the BOI efiling.fincen.gov website. Go there to start the filing. So they'll have you do that. Now they give you an opportunity to file a PDF report, but to me it seems much easier to just do this through the web, to file it online. So that's what we've sort of showed here. Like, what are you filing? Are you filing an initial report? Are you correcting a report? Are you updating? Is this an entity that once had to report but now is exempt? Because remember, you have to provide changes. And then here is the more detailed information for the beneficial ownership information report for each individual. It's okay, well, what is the entity? What is the tax ID of the entity? And then you go through and provide the beneficial ownership information. Now, what I just clicked to, this is, remember I said the company applicant information. This is only for companies formed after January 1, 2024. Only for those companies formed after January 1, because those are the companies where you got to say, okay, who helped you, who created this entity for you? The lawyer, the accountant, whoever it was. Then, if you have a FinCEN ID, this is where you plug that in. You plug in that information with just your FinCEN ID. If you don't have a FinCEN ID, then you're going to have to go through and, again, report all the information that you would have had to report to get your FinCEN ID if you're one of the beneficial owners. And remember, again, I'm just trying to reiterate things so that they sink in. You have to file this beneficial ownership information for each individual that either has 25% ownership or has substantial control of the company. So, it's quite a bit. As you see, here's the even more screenshots of even more information. So it does take some time. It doesn't take all day. Probably, the most significant part of the process is to gather the information. And so that's what we've been doing when we help people. It's like, hey, I'll just tell you our process is we say, hey, do you want us to help you with doing this? We're your registered agent. Do you want us to help you? Or even if we're not registered agent, we say, hey, can we help you file this? And we, helping people all across the country do this. The first thing we do is we say, here's a data call. Here is all the information that we need. And so if you have somebody internally that's doing this for you, that's what they're going to have to start with. Get their arms around all the information, because if they don't have it, they're going to go to this website and they're just not going to have the information that they, the full information that they need to actually submit. All right. And then at the end, you submit under your name, under your email address, and then you have to certify. Again, the certification is important for false claims purposes. Now, once it's successful, this is just example, that of one that it's filing. Once it's filed, you want to get that confirmation, download the transcript that it has been filed, because this is what's kind of frustrating. And in some ways, those of you who are familiar with some of the other SBA systems, it's like that. This is not like a publicly searchable database. So once you put it in, you can't really go back to check and see if you did it right. You'll need to print information off. And then if you need to make changes, you go back and make changes, but it's not like you go in and get to see your profile. It doesn't work that way, which again is a little frustrating, but that's just the way that it works. So here's a transcript, for my company GovCon, where I do all my government contractor training through govcontraining.com. It's got the EIN, got the jurisdiction, got the date. This was done on January the 8th, 2024. So that's what you need to print out. All right, just a couple more slides here and we're done. And I'll give you my email address again so that you can reach out if you need a copy of this presentation. I just wanted to go through now that we've walked through, I think everybody understands whether it applies to you. Hopefully you understand that, and you understand sort of the process of the reporting. Just to reiterate and recapitulate all the things we've learned here. If you are an owner of a business, of a small business, the first thing to do is to determine whether your company is a reporting company. So look at your tax returns. Look at 2022's tax returns. Look at 2023's tax returns if you filed those. Look at your number of full-time employees. If yes, then decide when to file that report. I would suggest not waiting. Start gathering that information. You got to make these determinations about who are owners, and then are you going to put in the directors, managers, senior officers, and then, as I've said, implement a system to keep track of the reported information. Here's something, I don't know if I've emphasized this, but I said that when you submit your passport, when you submit your driver's license, it has to be current and unexpired. Well, if you submit something, obviously none of those things are current forever. So one of the things that we're tracking when we help people submit those is we're tracking the expiration date so that we can go back to them and upload new documents. So that's one of your requirements, is that if your passport, they last, I think, 10 years. If you're coming up on an expired passport and you use the passport, you're going to have to go back in and upload a new image of your updated passport. That's one of the changes that you have to make. Like I said, you don't have to do annual filings, but somebody does need to track this. So whether you do that in-house, whether you outsource that, somebody has to track it. Otherwise, you don't want to just have, your driver's license in there and then 10 years later, you're way out of whack, because again, you're potentially subject to that $500 per day fine. So I think this is right about the final slide here. Steps to prepare: establish the internal procedures to ensure timely compliance for companies that were in place before January 1, 2024. That means this year before January 1st, 2025. So sometime between now and December, you need to do that. But for entities that get created this year, you only have 90 days. And then you only have 30 days for corrections or updates after that. And then, like we've talked about, if it's January 1, 2025, then you're only going to have 30 days. So, look at your entity documents. This is a chance to take a close look, make sure your corporate house is in order. I would say make sure that the owners understand as well. If you're gathering somebody's ownership information, their BOI information to report, then I would probably use that opportunity to tell them, hey, look, we need to know when you move. We need to know if you're going to move across town or anywhere. We need to know when you're going to change your residential address. We need to track the expiration of your identification documents. So that's something where you need to start that conversation in order to be able to stay compliant with the Corporate Transparency Act. So, if you have questions, feel free to email me. Like I said, probably the most important thing, if you'd like a copy of this presentation, because it has all those links and everything in there, you can send me an email at brad.reaves, R-E-A-V-E-S, at reavesgovcon.com, reavesgovcon.com. Really appreciate the opportunity to be able to tell you about Corporate Transparency Act and all this compliance. Again, don't shoot the messenger, please. I hope this has been helpful. But like I said, make sure that you could get somebody to help you with this maybe, but if you're doing it internally, I would just make sure you identify a point person so that you have somebody to go to that can get smart on this, that can maybe watch this presentation, take a look at the slides, and please do reach out if you need help or if you have any questions. All right, Marie, I think that kind of wraps up for me.
Wow, Brad, that was very thorough and very succinct. I learned a lot, from the presentation. So thank you very much. And with that, we're going to call this a wrap. Remember, you can email Brad to get a copy of the presentation. It will be posted on our YouTube channel. And so we greatly appreciate you tuning in for this session of our Charlie Mike series.